So, how's it going, everyone? Today I'm going to cover the topic about fair value gaps. I'm going to talk about three things. What is a fair value gap? What type of fair value gaps are there? And the third is how can we use a fair value gap and how to identify a high probability fair value gaps as well. I'm going to talk about that today. I think this video will be really helpful because at first when I learned about from the ICT what a fair value gap was, I was like astonished, you can say it like that, because fair value gap, in my opinion, is the best PD array there is. So let's go dive into it. So first of all, I'm going to show you what a fair value gap is. So a fair value gap is a three candle pattern, which is we need three candles to form a singular fair value gap. As you can see here, doesn't matter if the candle is bullish or bearish. So if you want to see a bullish fair value gap, we have one, two, three candles. So between them, we have this gap that is unfilled with the wicks. So first candle is high and the third candle is low, doesn't cross each other. There's a gap inside of them. So this wick and this wick doesn't like align, right? They're not on the same level. So this is called a BC, a bullish, which is a bullish VVG. VVG is a fair value gap. FVG or VVG doesn't matter. BC. What does BC mean? BC means buy side imbalance and sell side inefficiency. So it is efficient for a buyer, but it is inefficient for a seller. So bearish fair value gap would be as same as bullish. We need three candles to see a bearish fair value gap. Doesn't matter what will be. Okay, as you can see here, we have one, two, three candles. So this candle's low and this candle's high. Doesn't cross each other. So this is a bearish fair value gap, which is also called um, CB. So bullish fair value gap was BC and bearish is CB, which is sell side in imbalance, buy side inefficiency. So it is efficient for sellers, but inefficient for buyers. So how can we use a fair value gap in our trading? So uh, like fair value gap could be a draw on liquidity as well, and I mainly take trades from a fair value gap. So uh, let's put it on this way. If there is no fair value gap for me, there is no trade for me at all. Like I don't trade, I don't take any setups. I have the narrative. I know where the price is going to go. If there is no fair value gap, that way I'm not going to take a trade. Why? Because this, in my opinion, is the best PD array to work with. Uh, yeah, there could be a breaker block as well. There could be an order block as well. But if there's no fair value gap, I'm not going to take a trade because I've been on the markets for a while already, and I've seen this so many times. And the highest probability of your trade to go your way is there should be a fair value gap because to know where the market's going to go, you need a displacement. So if there's a displacement, there's a fair value gap. So uh, that that is why it's the highest probability PD array and the best PD array in my opinion. So uh, how can we use the fair value gap? So there's also an inversion fair value gap. So as you can see, price we're bullish because if you know what a PD array is, from this low to this high, we have this dealing range. If price is bullish, it's going to come down lower to discount. Touch the discount PD array, which is a fair value gap, as you can see. Touch the fair value gap, and if price is bullish, it's going to react from this and go take out this external high, external liquidity. So what do I mean by inversion fair value gap? As you can see, so first of all, what we need to know is that wicks. I talk about this in my videos a lot, and I'm going to say it again. Wicks do the damage and bodies tell this story. What does this mean? This means that the wicks, the wicks of the candle do the damage. Oh, I spelled it wrong. So wicks do the damage, bodies tell the story. So wicks actually do the main damage on the market, but the bodies tell you where it's most likely going to go. What we need to look at is if a fair value gap is getting respected or disrespected. When a fair value gap is getting respected, it is a good sign of it's going to your way. If you're maybe if you bought this fair value gap, as you can see, but yes, the candle went through this, but the body closed above it. I mean, the main thing is you don't want the bodies to close below the fair value gap, below the discounted fair value gap. So as you can see, when price reacted from this fair value gap and displaced up, what did we do? We disrespected all those bearish fair value gaps, as you can see. After we disrespected, what did we use it as? We used it as a support. This is a real support and resistance, guys. We disrespected this. We used this as an inversion fair value gap, which is IFVG. Note that, guys. We disrespected, look, as you can see here, the body of this candle closed above this, so this became inversion fair value gap. We used this as a support, and we continued our way to the upside. How did we use this as a support? Yes, we traded through below this inversion fair value gap, but as you can see, wicks did that, not the body. Body completely and like like uh, bodies respect, but the body of this candle respected it because, as you can see, body closed inside of this, not outside of this, and that means it is getting respected, and that is a good sign if you're on the right side of the market. So I'm on a daily time frame here. I'm going to show you how you could have taken this trade, and I'm going to show you more examples as well. So stay tuned. Uh, Yes, I'm on a daily time frame, so we came into the discount. We are in this discounted fair value gap. What are we going to wait? We're going to wait a confirmation on a lower time frame. So lower time frame for a daily will be, in my opinion, an hourly time frame. So I would look for an hourly time frame displacement with a fair value gap. So as you can see, it will be good on the 4 hour as well, in my opinion. Yeah, as you can see, price comes down into the BC, which on the 4 hour time frame we can see this BC has a sell side liquidity. So just to let you guys know, you can use the fair value gaps are internal liquidity on the lower time frame. On the lower time frame, they're internal, and you can use these fair value gaps as an internal liquidity to target this external high. This external buy side. External buy side. So this value gap is actually an internal liquidity. So we're in the discounted price. Price came down into this fair value gap. So what are we going to wait for? We are going to wait for a fair value gap to form. Where did it form on the 4 hour time frame? Here, as you can see, price displaced up, and as you can see, we have how many? 1, 2, and 3 fair value gaps. Fair value gaps here. It did trade into the second fair value gap, and after that it went up to the external buy side, as you can see. Went up to the external buy side. So I think on the 1 hour time frame it would be a better entry if you wanted to take that. So here we are on the hourly time frame. For swing traders, this could be a good opportunity to buy. We're on daily discounted fair value gap, which gave us an hourly displacement with the structural shit, but we're not here to talk about that. I want you to know a simple how you could simply execute it with only knowing what a fair value gap is and highs and lows. That's it. This is your one and only model that you need. So simply you could have taken a trade from this fair value gap this is singular fair value gap that we have. As you can see, 1, 2, 3 candles. This candle's high and this candle's low, doesn't cross each other. So that is a BC, buy side imbalance, sell side inefficiency, as we talked about in the at the start of the video. BC. So we took a long there, stop on the low, and TP on all the way on the high of the external liquidity, which gave us, for a swing trader, 1 to 5 risk to reward. As easy as that. But for trades like this, you need to wait because price needs to uh, confirm that on daily, then on an hourly, and when Fair gap forms, you enter there. For swing traders, though. But now I'm going to talk about how to find on lower time frames. Doesn't matter the time frame, time is fractal, but how you can implement fair value gaps in your trading if you're a day trader like me. So let's go over with yesterday's price action. You need to know what drawn liquidity is, guys. So uh, yesterday I was bullish. Why was I bullish? Because we have traded into this discounted fair value gap. Yes, price looks like it's going to go lower, but if price is going to go lower, it needs to uh, fill out these bearish imbalances that we have up there, right? We like most likely going to do something like this in the upcoming weeks. Fill this out, fill these two ferrule gaps out, and then go lower. If you don't see it, there's a ferrule gap here, there's a ferrule gap up there, and we have another ferrule gap up here, which price might go into. But we don't care about that for now. We what do you let's say it's Tuesday. What is our drawn liquidity? Our drawn liquidity most likely going to be this ferrule gap to be filled. So we have our daily target. If we have our daily target, that means we need to go on a lower time frame to find our entry to this uh, buy side for lower time frames, or to this fair value gap CB on a daily. So we have this drawn liquidity marked out. Let's go on lower time frame. So as you can see, where is our target? Here. Let's turn this off. So this is our daily CB. Daily CB. This is our target for this day. So first we need to implement time. What time are we going to trade? Most likely price is going to go to these places, to the daily targets on New York session. I'm not saying to trade New York session only, but that is what mostly happens. Then that's where the highest probability for all gaps form. So let's say we're trading from 9:30 to 9:30. And so 9:30 we expect price to go up to this daily target of ours that we marked out on daily time frame. So if you know what a drawn liquidity is, we know how to get up there, right? How do we know that? We know that by taking a trade from a fair value gap, which there needs to be displacement as well. So on a 5-minute time frame, we're this close. So let's mark out our 9:30 first, so you can see 9:30 comes with the volatility most of the times. So on 9:30, so there's 9:45 news as well. So on this time, we need to look for a fair value gap to target this high. Do we see any fair value gaps form on a 5-minute time frame? No, we have a fair value gap here, down here, down here. we have a fair value gap down there, but when is price already up there? What is most likely going to do? To go up there quickly and take that daily target out, or come lower, fill this imbalance, come all the way down to this, and then go up? No. If you look closely, there's no fair value gaps here on a 5-minute time frame. All of these imbalances that there should be are filled with the wicks. So as you can see, this candle filled out this candle's imbalance. So everything is immediately rebalanced. So if I go on a lower time frame, on a 1-minute time frame, where I mainly execute my trades, as you can see, we have this BC here, right? We have this BC here. It is price came down, filled this out fully, and then displaced up. So what do we see there? More. So after the displacement, price made a fair value gap again. This fair value gap and this fair value gap as well. So all these fair value gaps are tapped. Like all of them are tapped. All of them are filled up. Filled up. So if our daily target is that and even higher, even if it's even higher to fill out this daily fair value gap more. So what we could have done yesterday was taken a trade from this fair value gap. So if our daily target is correct, the lower time frame execution is the easiest part, guys. As you can see, all this this ones as well on a 1 minute time frame. On 5 minutes there was no variable gaps. On 1 minute time frame, all of them are filled already. So price has no real reason to go all the way down here. Remember this is a 5 minute unfilled variable gap. Price has no reason to go all the way down here, fill this out and then go up. No, price is going to react from every bullish for all gap at this point from here. So this is filled as well. This one's filled as well. This big BC is filled as well. These BCs are filled as well. And we have another displacement. We have this is a silver bullet time. So this was your silver bullet entry here. Stop. Maybe the minimum. How do we put your stop on? I'm going to talk about how we put our stop when we trade fair value gaps. So this could be your trade or even higher. As you can see, price didn't look down that day, even higher. But let's talk about how do we put a stop loss when we're trading fair value gaps. When we trade fair value gaps at minimum, this is a minimum. Your stop should be below the candle that made a fair value gap. This is a minimum of what you should do. You can put I mainly what I do is put a little more lower or even the safest stop is on the low at this point. This is the safest stop loss that you can get. So when you take a trade from this fair value gap, at minimum it needs to be on this low on this fair value gap because price could trade down into this and still respect this BC. Why? You remember wicks do the damage and bodies tell the story. So bodies didn't close below this, even if price traded down into this, but and wicked up, it will still respect this. As you can see here, you see this BC, price came down below this BC, below it, but the wick closed above the body closed above inside of this range inside of the BC, right? So that's what we need to see here as well. So we need to give price some breathing place, like give it some more space. This is the minimum that you can do. This can do. This is the minimum. This is a good stop loss as well. That's what I would do, and this is the best stop loss you can get. This is the safest stop loss, and you simply target this CB, or you can target higher and get a much more risk to reward. It's depending on your analysis, right? So hopefully you guys enjoyed the video and learned something new because fair value gaps in my opinion are the best PD rate there is, and I'm sure you'll get a really good information. You got a really good information from this video, and you need to test this out yourself. This is not as easy as I talk about it. I talk about it because I'm really used to this already. I've been doing this for months and months, so it is really easy for me to identify a good and bad fair value gap as well. I talked about what a highest probability fair value gap is. It's when the higher time frame target aligns with the lower time frame structure and fair value gaps and displacement as well, right? So I tried as hard as I could to simply um, explain what a fair value gap was. Hopefully you guys enjoyed and learned something new today. If you did, leave a like because it helps me a lot, and subscribe to the channel as well. And as always, have a great trading. Goodbye.